All right, everybody, welcome back to the final video of the advanced training of this free course. All right, we're going to put everything together, all the SMC concepts, all the algorithmic concepts for one trade. This is oil, crude oil. All right, I'm going to show you how I mark everything up and frame this trade. All right, so first things first. All right, it is right here at the 8 o'clock candle. All right, I stopped it right at 8:15 because you guys know I look for trades after 8:15. That's pre-market. So typically after 8:30 is when I'm looking for my entry. All right. So with that being said, we'll sit here. We're marking up the chart. You can see here we've got. I usually mark 1 to 2 1 hour fair value gaps above and below current price. There's a fair value gap right there that we're inside of. The next one is up here, like so. All right, and then I'm looking to mark the ones below us as well. And the only one below us is this one right here. As of right now, do we have any? Don't look like we have anything lower. Yep. All right. So that's what I got framed right there. Now, first thing first, I see that this at this fair value gap, the candle that closed above it, we already had a what? Change in the state of delivery. We already closed below that 1 hour candle there. That signifies that what? We had a change in the state of delivery on the 1 hour time frame at a 1 hour bearish fair value gap. All right. Turn on my software and see that, well, it was a bullish order block on the 1 hour, and it turned into a what? A 1 hour bearish breaker. And you can see we never closed above the bearish breaker. We closed right at the tippity top of that bearish breaker. Crazy what price does. All right. So this right here, you had a change in the state of delivery at the 1 hour bearish fair value gap and this 1 hour bearish breaker. All right. That tells me I am now looking for a sale. All right. And I'm going to be targeting this fair value gap down here and potentially this low. All right. So I've got multiple take profit areas. All right. I'll be looking at the target. All right. So we'll turn this off here. We'll go to the 5 minute time frame. All right. We'll take a look at the 5 minute time frames because we're going to do what? We're going to mark our algorithmic levels. All right. We're going to mark all of our algorithmic levels. All right. So first things first, let's go mark there it is. We'll go mark the daily. All right. Come on now. There we go. Mark the daily algorithmic level. So we got that marked. All right. This here is that 1 hour fair value gap. All right. We can delete this here. That was where the change in the state of delivery was at for the 1 hour. So we got our 1 hour. So we got our daily algorithmic level. Let's go mark 2 a.m. It's bullish candle. So we mark the low for the open price. 2 a.m. there. All right. Let's go mark 4 a.m. 4 a.m. is right here. It's bearish. So boom. Oh, look at that, man. Daily and 2 a.m. 4 a.m. are all lined up. All right. And then, all right, 8:15. All right. So then we'll also mark the 8:15, which is right there. Crazy. Three of them all lined up on top of each other. All right. All lined up. And we know we're looking for the bearish. We're looking for the bearish. We're looking for the sell. All right. Boom, boom. So we got three algorithmic levels sitting right there. All right. 15-minute time frame. We go take a look. You can see here on 15-minute time frame, we've got a 15-minute fair value gap here inside of pre-market. And then we got another one right here inside of pre-market. All right. This big one right here, we filled right there. That filled it. All right. As you can see, we got two fair value gaps right there inside of pre-market. All right. 5 minute time frame, we already marked our algorithmic levels. All right. Can get a little messy here. All right. I'm going to delete the H1 fair value gap because we already know there's an H1 fair value gap and an H1 bearish breaker where we had a change in the state of delivery. So I am now looking for a sale. I'm looking for a sale. All right, I'm going to be aiming for the lower pre-market as a take profit area. I'm going to be aiming for the high of this 1 hour fair value gap, the low of the 1 hour fair value gap, the low of New York session from the day before, and the low of pre-market from the day before. Those are all liquidity areas. All right. All right. So I'll go down to the 3 minute time frame. This is oil. I'd recommend taking trades on the 1 minute and the 3 minute. The 3 minute is going to give you real clean looks. You have more bias there as far as getting a good change in the state of delivery. The 1 minute can give you a lot of false reads. All right. We'll come here to the 3 minute, turn the software on, and look at that. Inside the fair value gap, right below right below 2 a.m., we've got, you guessed it, a bearish breaker that's inside that fair value gap right there. So that's pretty clean right there. It's a good area. We also have a bearish breaker inside of this other fair value gap right here. So this is what I'd be aiming for. I'd be aiming for a bearish breaker inside of a fair value gap. There's two 15-minute fair value gaps. All right. We're looking for a price to sell. I don't really think we're going to go above this algorithm level. If we do, we're looking for here. But I'm looking for us to sell most likely out of this one because inside of this fair value gap, not only do you have a bearish breaker, you also have a algorithmic price level. All right. That makes this fair value gap more attractive than this one. All right. Anytime you have fair value gaps that have algorithmic levels in them, as well as bearish breakers or or vice versa, bullish breaker, bullish order block, or bearish order block. If you got an algorithmic level and a key level inside, that is a high probability fair value gap where you'll potentially see some rejection. All right, and price movement. All right. So let's see here. Let's go ahead and play. All right, we'll hit play and we'll watch price move. All right. Look at that. Right up to 2 a.m. Rejected it. We're rejecting 8:15 as well. We haven't broken it below that. So I want to see a break below these three levels here. All right. And there we go. All right. There we go. So let me back it up here. We had that first one close right below 8:15 and 4 a.m. And then you came back for a retest. My entry is going to be off of, you guessed it, 8:15. All right. 8:15. 8:15. We closed below 8:15 and 4 a.m. Came back to retest it. That was where my entry would be at. Price went a little fast here with the little replay model. All right. My stop loss. All right. Now you got a fair value gap here and a small one here. You don't want to put your stop loss inside of a fair value gap. So here's that bearish breaker. I'm gonna put my stop loss just slightly above it. That's 15 pips. So I'm gonna put it about 18 pips. Right above. There we go. 18.2 pips. Right above 2 a.m. All right. And I'm going to target my levels. Now, I always tell you guys to aim for 1 to 2 risk to reward ratios, at least 1 to 2. All right. If we go to pre-market low, you can see that's 1 to 1.5. Good setup. All right. But I wouldn't be looking for that. All right. My first take profit would be that fair value gap, that 1 hour fair value gap. That'd be my first take profit. You can see here that is 1 to 3.15. All right. 1 to 3.15. You're risking 18 pips to get 57 pips. All right. Next TP, I will be aiming for the low of that fair value gap to bring what? To bring balance to that price range right there. So 1 hour fair gap. That's a 1 to 4.62. After that, I will look to the low of New York session from the previous day. That's 1 to 5.93. And in my next target, the low of pre-market from the previous day, 1 to 6.63. Obviously, I've seen price. All right. Ideally, I can tell you my TP, depending on the day and how much I was risking on this trade, I'm going to the high of this fair value gap, that 1 to 3.5, I believe 3.75, and I'm out. All right. But I know it comes down here, but I want to show you how it all plays out. Let's go ahead and play it out. Price is pushing down. We saw that. Boom, boom, boom. Just took out the lower pre-market. And all right, let's turn this off so we can see it a little cleanly here. Got real close to the fair value gap right there. Just waiting now, waiting and waiting and waiting. Boom. Hit that fair value gap. TP's hit. Remember, that TP is 1 to, I believe, 3.75. 1 to 3.14, I'm sorry. 1 to 3.14. That's a 1 to 3 risk reward trade. You cannot be mad at that. That is a good trade. 1 to 3.14. Obviously, I know it goes lower. So here, lower of that fair value gap. You see, hit the high of that fair value gap, rejecting it right there, but it's come back into this fair value gap right here. This mini 1 minute fair value gap. And you see it's rejecting out of that. Came a little higher. There's a 1 minute fair value gap right there. You want to see these fair value gaps get respected. All right. If it breaks above it, you anticipate price going higher. All right. Just waiting, just waiting, just waiting. Finally getting some movement. There it is, moving to the downside finally. Oil a little slow at times. And boom, you got TP number two hit. 1 to 4.64. 1 to 4.64. That's TP2. TP3, we know. Low of New York session from previous day. That's 1 to 5.94. Price pull back to the fair value gaps right there. Pull back to the high. Big pullback right there. I'd probably be out. I'd have been out, as I said right here. But I know it goes lower. So if you are a swing trader, all right, you had a premium entry. All right. And if you are swinging and you believe it's going to go that low, you can look to hold it longer. For me, I can tell you, ideally, I'm out at the top of that fair value gap. All right. You see it smash through that. I'm out right there. This fair value gap, it could easily reverse and head back up. All right. Only time I would get back in is if we close below this fair value gap, then I potentially look for a continuation. All right. Long story short, I know it gets down, take out the low. So I'm not even gonna go there. But that's the keen setup right there. All right. That was the setup. 1 to 3.14 risk to reward on that trade. All right. And you got a clean setup after price rejected out of that off of 2 a.m. All right. There was a 3 minute bearish breaker right there. So we got the rejection off that. Closed below 2 a.m. All right. I waited for it to close below below 8:15 and 4 a.m. here. I waited for it to close below there. Why? Because it kept rejecting 8:15 and pushing up. So I was like, all right, I'm not going to sell from up here because it could buy higher because there's a fair value gap above it. So I wanted to see price close below some algorithmic levels, which it did here, close below 4 a.m. and 8:15, retested 4 a.m. and 8:15. We got our entry right when it retested it very quickly. Stop loss above 2 a.m. and this breaker. We targeted the high of that fair value gap, the 1 hour fair value gap, and we got a 1 to 3.14 trade. So hopefully you guys see how I put everything together to analyze the chart to understand what direction we're looking to trade, and then to utilize not only the software, all right, which you'll get access for free, all right, but also these algorithmic levels, all right, to frame your trades, utilizing liquidity and fair value gaps as your take profit levels in this case. Easy trade. All right. Hope you guys learn a lot from this course. Look out on my YouTube channel for more and more videos as I continue to teach more about this hybrid model of trading that I do. Thanks.